Hello and good morning. We will be starting the crypto mining industry transformation and the digital asset ecosystem session shortly. Please take your time in logging on, and we look forward to welcoming you soon. Hello and good morning. My name is Gabriela Cruz, and I sit on the board of directors of the Global Digital Asset and Cryptocurrency Association. This morning, we are pleased to welcome you to the crypto mining industry transformation and the digital asset ecosystem session. Today's event will be structured as a roundtable event and will include speakers from a variety of different leading institutions in the crypto mining industry. For all questions and answers, we have activated the Q&A option located in the toolbar at the bottom of your screen. As this event is structured with an interactive question and answer session where you, the audience, have the ability to ask questions of our panelists, we ask you to please put any content-related questions into the Q&A box located at the bottom of the screen so that they can be effectively seen and included by our moderator. For any of your technical issues or needs regarding audio or video, please place those questions and answers into the chat box function located as well at the bottom of the toolbar. Again, we are very pleased to welcome you to this important event, and a happy Earth Day to all of you. I will now turn it over to my friend, colleague, and fellow board member, Tony Pettipies. Tony?
On mute. Good morning and welcome. I'm Tony Pettipies. I am board member, as Gabby says, of the Global Digital Asset and Cryptocurrency Association, a self-regulatory association founded here in Chicago in 2002, but with a global outlook. We have a broad international membership, which includes miners, exchanges, custody providers, bankers, market makers, traders, all aspects of the industry, including a host of vendors providing services. Our goals are to help bring clarity to the regulation of the crypto markets, especially the crypto spot space, which you know is growing rapidly. We've developed some best practices for many aspects of the digital asset industry, including cybersecurity, AML, KYC, and we're looking closely at surveillance. We have a number of committees focused on different aspects of the industry, and I run the Policy and Regulation Committee. Our newest working group in that is mining, and that's run by Denis. Denis is our man in Berlin and has an extensive background in mining. He has run many successful mining operations He's currently the chairman of CMG mining group in Berlin and is very involved with a number of associations in the area. Denis is going to introduce the panel this morning. We have a distinguished panel of experts. So with that, I'll hand it over to Denis to run the show.
Thank you, Tony. Yeah, I just wanted to make a short intro to the whole initiative of Bitcoin mining committee. Obviously, as we all, whoever is involved in the field and who is observing it from outside, sees there is a huge sort of evolution of steps we've been taking in the last sort of 2 years specifically. I mean, we have a more sort of integration on the institutional side with the Bitcoin mining. I mean, this whole business is transforming quite fastly. And obviously, as a part of this sort of observation and sort of interactions, we decided to coordinate it more as a sort of a platform where the miners and the community who is interested in sort of Bitcoin mining space will be willing to connect, exchange ideas, and sort of develop new initiatives. With the CMG side, basically, it's a short intro. We started in Berlin as a offline, where it was still allowed by COVID meetups, which eventually sort of transformed into sort of online version, which I think is actually more beneficial because with our sort of sector, we have a much better outreach in a online form. So, which is great. I wanted to, this is our first session. We obviously have a lot of topics which we could cover, but we decided just to pick on only 4 of them just to begin with. And going forward, we're going to have more sort of streams developed specifically to Bitcoin mining and sort of specialized working groups set up. And we're open for anyone interested from a mining space, basically, or anyone basically who is working with Bitcoin miners to participate, sort of take part of that. So we're open. Just reach out to us or basically to anyone in Global DCA to connect to that. So to begin with session, let me start an introduction. I allow everyone just to have a short intro from about themselves, how they got into the field, about the company they represent. So I'll start with Iggy. If you can.
Good morning, everyone. Iggy Lai, recently joined the Hive blockchain team. I used to be one of the founders of GPU1, who got recently acquired by Hive blockchain. So the goal is to make sure that we put all the expertise together of both teams so that we can grow Hive blockchain's status in the mining space.
Next, we can go to Wit. I'm just going to go on the screen, so just that's easier for everyone.
Sure. Good morning, everyone. Thanks to Global DCA for putting this event on. Denis, thank you for moderating this panel. Excited to talk more about mining with everyone. My name is Wade Gibbs. I'm the founder and CEO of Compass Mining. Compass Mining aims to democratize Bitcoin's hash rate by allowing everyone to mine Bitcoin profitably. We work with funds, family offices, institutions, and individual retail miners who are looking to get started with just one ASIC. And we help them host those ASICs at great facilities all over the country, or all around the world, I should say. And also I'm the host of the Compass Mining podcast, focused on Bitcoin mining and the news and events surrounding the Bitcoin mining industry.
Thank you. Dave, please.
All right, thank you, Denis. Glad to be here. Happy Earth Day, everybody. Dave Farrell, CEO and co-founder of Compute North. I come from the data center managed services space. I've been in the sector 25 years. Got into mining in 2017 from Minneapolis. Needed some garage heaters, and miners fit the bill. Looked to actually scale up operations and was looking for what I consider a credible, low-cost host, and just didn't find one that existed. So really took that background, took it into this sector. And we really worked to differentiate ourselves by, being very trustworthy and credible, moving at the speed of crypto. And everyone on this panel knows what that means. And I'd say last but not least, taking a very energy-centric approach to this market and this space, being low cost, working on the renewables, being a good citizen to the grid. And I think we'll talk about a lot of those topics and later on. So excited to be here today and looking forward to the convo.
Thank you. Ethan?
Hey everyone, great to meet you and thanks for joining this morning. So my name is Vera. I started my career at Goldman Sachs doing investment banking. So poring over financial statements, looking at 10Ks. And so very familiar with all the work that goes into diligencing some of these public investment vehicles and private ones. Started a mining company called Luxor Technology just over 3 years ago with the aim of becoming an institutional level software player for miners to partner with. And today run one of the larger hash rate management platforms in the world. So excited to be here and talk mining and hash rate.
Great, great. Karim?
Hey guys, I'm Kareem. I'm on the mining team, I'm on the research team at Galaxy Digital, focused on mining in my previous job at Coinmetrics. I'm just excited to be here. We're building out the best research team in the industry, and it's it's a good time to be in Bitcoin.
Excellent, excellent. Sergey, you want to comment?
Hi, everyone. Thank you for having me here. Gabriella, Denis, Tony, thank you for inviting. It's such a pleasure to be on the same panel with such heavyweights in the industry. My name is Sergey Rusinovich. I'm a CEO and co-founder of Easy Blockchain. Easy Blockchain is a cryptocurrency mining company that focuses on utilizing wasted energy, in particular wasted gas, and for crypto mining. We work with oil and gas companies or any other type of energy producers that have excess energy that can be utilized for the good. I started Easy Blockchain over 3.5 years ago when we were first a hosting provider. And since of 2018, there was a crypto winter, the Bitcoin crashed, and we were in search for cheaper energy. And we figured that the cheapest energy that can be is at the source of energy, which is in the oil field. So currently our business is focused mostly on utilizing flare gas or vented gas or stranded gas. And we are working with different companies all around the United States, as well as we have just launched a couple of projects in Canada.
Great. I mean, we'll follow up on that. And also we have an item on agenda, which I'm sure certainly you can elaborate more on the environmental side. Basically, so we can start our sort of first item we had on agenda, which gives a sort of a more generic sort of overview, and in light with all the recent developments we see, it's a sort of institutional involvement, and just not only the institutional involvement, but the actual evolution of a Bitcoin mining sector. And I'm sure everyone has their own experience depending on sort of what their business model is. But I'm sure everyone has something to comment in terms of the clients, what they see coming in, a type of new sort of clients, from a type of investors, maybe from the miners themselves. I mean, with the scalability of the size, the approach. And there's also the more interesting topic, which we see more sort of highly sort of developing in North America at the moment, is the capital markets. So with the listed, so I guess the majority of whatever we have on the sort of the listed stocks are listed in Canada. It's more sort of coming to US, and the new sort of wave which started. It's not a wave yet, but it's already an indication. It's the SPAC structures. So I'll throw that sort of into the discussion, and let's say we can start maybe the same way. If someone just want to comment, start with Iggy, how we see it from their sort of perspective, from a business, from personal experience, what we see sort of taking place now in the sector.
Oh, thank you, Denis. Basically, right before we joined Hive, GPU1 has been, growing very quickly, and because of the institutional miners, and thanks to the institutional miners as well, we've been able to build very quickly in Canada with green energy as well. So we're very happy about that. It's just that the amount of growth that needs to be done is so much that we had to kind of pivot towards doing something more like self-mining. So because if we continue just taking more customers, I think it would be such a difficult task to continue growing that it kind of be counterintuitive a little bit. So yes, there's a big migration of miners from different countries around the world, different areas around the world towards North America, and it's going to benefit all the areas where the low power cost is king. So a lot of the panelists here are in those kind of regions. So yeah, that's my
Yeah.
Yeah.
Yes,
So
yes, please. Yeah.
okay, yeah. I mean, the uptick in mining has been fantastic. You know, with us at Compass, we've noticed that there's much more interest than before with mining. Right there's just increased desire to get exposure to Bitcoin in general, and with that comes the desire to understand and have and participate in the infrastructure supporting the Bitcoin network. So we're seeing, a movement now from people out of China where hash rate has been historically centralized. We're seeing Chinese miners that are looking to diversify their portfolio by opening operations in North America, whether it's the US or Canada, also in South America, Argentina, Paraguay, some in Venezuela. Of course, the Russian market and the CIS region is continuing to grow and expand. You have major mining facilities in Russia that are growing from hundreds of megawatts to approaching that 1 gigawatt number that everyone likes to talk about. There's emerging regions in Scandinavia, with Norway now taking a much more amenable stance to Bitcoin mining. We're seeing a growth there, especially in northern Norway. And right here in the US, I mean, you've got a ton of new North American Bitcoin mining companies that are popping up, whether it's the pubcos that are growing at a crazy pace, or these under the radar miners who are growing tremendously, who will likely be the next round of public companies to come out in North American Bitcoin mining.
Great. Dave, you want to
So
on that?
Yeah, Dennis, I'd summarize in 3 themes. Some of the panelists have already spoke on it, but certainly we're seeing just industrial scale, industrialization of the sector. What used to be, tens of megawatts was a big client. Now it's hundreds and 200 and 300 megawatt type clients looking to deploy. And it's much more of a long-term trajectory, 2021, 2022, even some orders into 2023, and thinking through a longer term horizon and what I'd consider playing longer ball. It's more sophisticated, it's larger capital pools, it's just some of the areas you talked about, but definitely access to the public markets and just larger players, family offices, hedge funds, private equity, and the like have seen the space and are intrigued and looking to get in. Secondly, I'd say that, parasitic loads, i.e. running as hard and as fast as you can, as cheap as possible, is quickly going away. And what I mean by that, I think, operators need to be much better citizens to the grid. What we saw happen in Texas in 2021, a perfect example of, with the push to renewables, the push for more diversified and distributed generation, and the intermittency that creates on the grid. I think this type of load is going to become ever more valuable to the energy providers and to the grid, because it can be curtailed, and it should be, I think anyone would agree on this panel, should be shut down for health and human services and other things. And even with, China had the big change where they had the big drop here just in the last 30 days or in the last 10 days, the Bitcoin network is built to be resilient. It's built to run around those kind of things, and that scales. And then last but not least, I'll say the good guys are winning. I would say that overall, the market is maturing. We're seeing much more appropriate actors. They're doing it for the right reasons. Things like anti-money laundering, know your customer, OFAC rules. People are really taking these things seriously. I think the ESG component is becoming more and more forefront, and I think that's good for everyone in the industry.
Thank you.
Yeah, these guys have touched on a lot of really interesting trends there around the institutionalization of mining. Coming from the mining pool perspective, I think we have a really unique data set that we look at. So when we started the company in late 2017, we were connecting to mostly retail miners. They're hanging out in our Discord and Telegram channels. Some of these miners had 5 to 10 machines. And what we've seen over time progress is that those accounts have become quite consolidated. And I can speak for Luxor here, but about 5% of the accounts make up more than 95% of the hash rate on our platform. And I think that holds true for the majority of mining pools out there. And so you're really starting to see these large players come in. They get access to the best capital. they can acquire the most amount of machines, get the best power opportunities, negotiate the best firmware and software fees, everything that really allows them to flourish at scale. And so it's really becoming a game of size here. And a lot of retail has been priced out of the market, mostly because of the high cost of getting involved in mining. Buying a machine is quite expensive. Hosting at a facility, there's usually minimums, and that's why initiatives like Compass Mining that WIT is doing, some of the work Dave's doing, hosting clients, like that's really important to the overall network, because it kind of counteracts this trend. Because at the end of the day, the network, we want everyone to participate, and so not only institutions should be able to, everyone should be able to. And as those initiatives comes up, we should make sure to support them. But that's kind of the trend we're seeing, and we're seeing the larger players unfortunately get the advantage here.
And if you allow me to add, I think a few panelists already touched on ESG and balancing the grid and curtailing the power. I think Bitcoin mining has become not just only a way to make money. Now it is a big part of energy markets, specifically in Texas. A lot of companies are utilizing cryptocurrency mining as balancing the grid. And also what we can see in our market right now, we are making oil and gas companies to become cryptocurrency miners. They are looking at this as a solution to something else, not just to make money. Because before, a couple of years ago, all what the crypto mining community was thinking, just the Bitcoin go up and we can make money. Now it's more of a bigger market, a bigger picture. Cryptocurrency mining has become an integral part of energy markets in multiple regions. And I think with the growth of renewables and growth with moving to renewables, we'll have more and more cryptocurrency mining being used in the areas where there is a lot of wind power, solar power, or gas power. So that's a very great way to describe the mining industry today. Especially there are more players, more serious players looking to this as a long-term picture, and not just to convert the energy into money and leave for vacation. So now it's a bigger industry, and this industry is being taken a look at by institutions, by regulators, and not only from cautious perspective, now from embracing perspective as well. So we could see that in Kentucky, the local government is incentivizing, I think it's Kentucky, incentivizing cryptocurrency mining. And I think a lot of states and cities will follow. Miami mayor is one of the examples. It's true, there is a lot of nuclear power, especially in Illinois and in Florida, which could be utilized as well.
Karim, you want to add something on that?
Yeah, I mean, look, like mining is institutionalizing. There's kind of no other way to slice it. Like, I think it's an industry that started as a fly-by-night kind of thing, and we're seeing the demographics behind it change pretty dramatically. Galaxy is committed to servicing institutional clients and kind of making sure that this space heads in the direction that we think is healthy and pro Bitcoin.
Well, I mean, this is all our sort of items on agenda. It's let's say it's deriving from this development. One of the next thing we want to cover is basically since we have more guys coming from traditional sectors, i.e. investors, even the players, because I know, I mean, quite a few of you, I mean, Dave, Iggy, I know you come from traditional data center background. And this is what we also see, that there is a transformation, it's almost sort of a different category of players emerging within a sector where the external clients are expecting from the sort of Bitcoin mining players to be of certain standards. It's one of the initiatives which basically we want to discuss also within the mining committee is some sort of a basic sort of recommendation and standards, because I think what's important is from an outside perspective. I mean, if an investor or a client comes to any location, basically, they want a contract, they want to understand that there is basic some sort of a SLA in place with basic requirements that like you usually have in co-location space. You know, I personally, from my experience, we did it for a project a while back. We tried sort of dispatch the auditing team to see, ISO standards, to see how basically we could be aligned on some sort of way or form to the traditional sector. And I think this is something that we obviously don't want to sort of push forward, as additional bureaucracy, but I think some sort of a clarity and a sort of a easily understood checklist should be sort of presented for people to see. So I'll be happy to see your comment on that. I mean, because you have your own facilities, you have your clients, how you interact with clients, what they expect from you in terms of SLA. And sometimes, especially like I think WIT, he has multiple clients coming in and have multiple facilities. So, I mean, their approach. So I'll be happy to hear from, I mean, we can go the same way, like comment from your experience, what you see. I mean, it's a good initiative. This is something we should implement, like across the board, or any objections to that, Yeah, if you want to start, I mean, we could probably go the same way.
I think Whit would be a good person to start.
Yeah, okay.
And I was going to defer to Iggy and Dave, right? I mean, for us, we work with great data centers, right? The mining facilities that take part and are approved to place on Compass, they are the best in the world. And it's very important for us that we maintain that level of service and support at the data center level, so that we're able to pass that along to the customers, who most of the time are never going to actually go to these data centers, right? If I have one machine and I'm hosting it in Canada, but I live in the UK, I mean, the odds of me going and visiting this data center are very low. So we want to make sure that there are proper SLAs in place with our contracts. But a lot of this comes down to the relationships that we have with the facility, right? So if we onboard a facility like Compute North or GP1, now Hive, any of these hosting facilities that are great, we're working with the SLAs that they already have in place, because they already provide great service to the customers that they are working with. So we don't want to meddle with that, right? We don't want to come in and change the way that they're operating. We just want to give the ability for smaller miners to work within these already great systems. So, some standards that are in place with us that we make sure to offer are 95% plus uptime. Most of our facilities are above 98% uptime. We're also looking now to partner with more and more facilities that are 100% renewable powered. In the US, there are still a lot of facilities that are grid powered, but we are moving in that more carbon neutral direction, if you will. And then on the service side, there are different strokes for different folks, is how I would put it, but it's all up to the scale of the customer. The larger that they are, often the more focused and experienced they are with getting these contracts in place. Whereas with us, when we're dealing with a lot of people who are new to hosting, right, they've never really had the ability to mine Bitcoin before, we are taking on that role of negotiating these contracts for them. And we find that, by and large, the Compass platforms, the verified facilities are on the Compass website. They have been a pleasure to work with. They have made everything so easy, from the tech support side to the uptime guarantees that they make, to the troubleshooting and tech support that comes up. Everything has been amazing so far.
Yeah, building on that, I think, coming from the data center space has been both good and bad. The good part, I think, is that the professionalization of this sector needed things like service level agreements, SOPs, just standardization of things that customers could expect in terms of transparency of your operations, how you deliver. I think where the real magic is, we use the term data center, but frankly, what we do is compute. Like, it's really, at the end of the day, is optimizing for non-mission critical computing, and being able to do things like shut down in the middle of the day. You can't do that in a traditional data center. And unless you're built to really construct within that, you explain to your customers why that's important, why they get value, financial benefits from that, and frankly, why you're being a good citizen to the overall grid, helping balance in the state of Texas, like Sergey pointed out. It's just simply not the way that a typical hyperscaler or data center would think. It's a very unique approach. And I think those elements have been really important to the transparency of the space. I said earlier, the good guys are winning, and just look at the panelists here. So scale, size, credibility, reputation. 4 or 5 years ago, it was really hard to know who you could trust and who you could work with. And what we've been fortunate enough now to go through a few cycles to the point where the bad actors have, for the most part, been pushed out. And the people that are still there are the ones that have stuck with it and built a reputation. I will say, I do look forward to more standardization on the equipment side on behalf of my engineering team. So as the equipment manufacturers, you know, the fact we're still working with shoebox size devices that are really made to be one-offs versus large scale computes. I think, you know, technologies like dielectric fluid immersion cooling and some of these things as they scale up will change some of that. But part of that is just the trajectory and is going to be the evolution of the sector, which is what makes it fun.
Yeah, I wanted to add on that as well, because I think when you speak about relationships and reputation and everything, I think the reputation with the power companies is super important. I think the way that we work with them and how we collaborate with them is important. When we look at our facilities in Quebec and in Sweden and in our Iceland, like when we need to collaborate with the grid and with the power companies, there needs to be software that does it very easily and fast. So that's one of the things that we developed swiftly and took some time to make it work properly. But you know, those are kind of the things that will help us have a better relationship with all of the power companies that we deal with. And this is all over the world. It's not just in countries that we are in. You know, I think everybody wants to have that great relationship with the power companies.
You know, I will add, Renata Skoda, I represent Global DCA, but I also represent Galaxy Digital here. You know, as these miners, mining, you know, process is getting institutionalized, and really the name of the game is size, or is going to be size, is becoming size. You know, a lot of these entities outside of the data center part of the business within mining, they will start looking at counterparty risk, getting capital, you know, looking for capital, looking for lines of credit. So working with banks, working with, you know, within a, you know, traditional capital markets environment. And as you do that, when you grow, all these counterparties, banks, investors, you know, you name it, they all will be looking for some kind of standardization and policies and procedures within your entities, within those mining entities. Data centers today are well structured and they understand it. But I think within the mining community, what would be beneficial is to standardize the mining process itself. So then when, you know, these counterparties, investors are looking for some kind of documentation of processes, approvals and such, then you can easily present it and be more, you know, I don't want to say trustworthy, but you know, you're becoming a major player then, having access to capital and having access to some of those relationships. So, you know, it is going to be more and more important to focus not only on the data center and, you know, a part of the business, which I think is already well established and, you know, capitalized already and sort of has the standards and checklists down, but also the mining process that is much less so standardized and structured. Maybe you have thoughts on that.
Yeah, I guess to kind of build off of what Renata was saying, like I joke that like every article I write starts with mining is super opaque. And thankfully that seems to be changing. You know, like there's a lot of developments, onshoring, better data, and better access to you know, like just better transparency and resources like the ones that WIT is building out that kind of vet facilities and you know, establish trust in a you know, verifiable and auditable way. That you know, mining is becoming less and less opaque day by day, and that's really exciting. So I think it's a good time to be in the space.
Sergey, you want to add something? Or?
Yeah, I want to add one thing, which has always wanted to talk about, and I think Global DCA is a great organization that can help us. I think one of the biggest things that cryptocurrency mining companies are struggling with right now is the hardware. Hardware, not only its availability, but its price and its price manipulation. So I think the institutions like Global DCA and us miners, so we need to form a union and start actually pushing back on suppliers that they cannot raise prices overnight when they really want, just because Bitcoin went up or down. Because usually when it goes up, as we all know, the prices for hardware goes up. When it goes down, the prices of hardware do not go down. So there is much more regulation needs to be in mining hardware space, and they touched on it, that we need to have institutional grade level of hardware. I think it's time to move from those aluminum boxes and just ship them. That, I mean, we can build one big mining hashboard or something like that that could work better in our data centers, mobile data centers. But we should have more communication with suppliers, specifically with the higher management. They need to hear what the problems are, because all what they care, I mean, Bitcoin goes up, cryptocurrency mining companies are paying for all equipment, but the problem is that when Bitcoin goes down, we are paying our bills. If something goes wrong, we are sitting with that hardware. So all the risk is on cryptocurrency miner. And that's what Renata just touched, that there's a lot of risk sharing that has to be in place, that not only a cryptocurrency miner has to be a risk taker of everything. Because when we go to connect to a power, we need to put double or triple deposits up front. It doesn't matter how great we are, they all our money up front. So we need some credit lines, obviously, that would help us to grow business and to grow business efficiently. But cryptocurrency miners and suppliers of mining equipment have to collaborate. They have to listen to each other. Maybe they just don't listen to me because I'm very vocal about that. But at the end of the day, there must be more communication, more collaboration, because we are end users, we are customers.
Okay.
And I guess
Can I jump in on that comment?
Yeah, definitely.
Okay.
Definitely.
All right. So I too have felt the way that Sergey has felt in the past with regards to the price of ASICs being correlated to the price of Bitcoin. Unfortunately, because of supply and demand, and now just experiencing what I have in this field, it will never happen. And I say never as in never. And the reason it will never happen is because Bitcoin ASICs, no matter how much the industry grows, they will likely never get the chip allocations that are currently being allotted to the Apples, the Microsofts, the big consumer related products. We fall somewhere very far down on the totem pole with that, and because of that, it just creates the supply constraints, right? Supply constraints will lead to the increased prices, especially as more people are rushing to buy these machines. All that we can do is look to efficiently deploy capital in downturn markets, right? So rather than looking at how the prices are going up now, that the prices of Bitcoin are rising exponentially, we instead need to be focused on how can we conserve capital and be ready for that next time when people are looking to capitulate on this hardware that they've overpaid for, because the idea that we're going to get manufacturers who are making a tremendous amount of money right now in this market in the current conditions as they are, the idea that they're going to come off of their profits and drop prices in an effort to be quote unquote fair, it's an unrealistic argument because it's subjective, right? It's not something that fair is not quantifiable. What is fair to one is not necessarily fair to another. The free market is going to do what the free market is going to do, and any additional regulation that's invited into Bitcoin mining, in my personal opinion, although it may be coming anyway, we should not be asking for it. It's a slippery slope.
Ethan, I think you wanted to comment as well.
I was going to talk about collocations, but I think the ASIC discussion is getting more interesting here. So I don't want to take away from that. Jumping into this ASIC thing, we work with clients every day, whether they're buying rigs through Compass or whatnot, seeing the ASIC markets right now, it is incredibly challenging. You may get quoted a price in the morning and you have to execute on that purchase later that day. But that's not just one company that's doing that, it's the entire industry. And so that is the way it's working right now. And so miners need to adjust to that. They need to be flexible. They need to make sure that their governance is set up that they can actually move much quicker, moving at the speed of crypto, as Dave would say, and be able to execute on those machines. It's just the way the industry is heading. And so that's really important for them to do. And Leo Zhang talks a lot about this in his research pieces, but being a miner is really like an ASIC management like portfolio strategy where you're constantly buying and selling ASICs, tapping into straight from the manufacturers or from secondary markets, brokers, directly from another miner. And so you need to look at your operations as such and make sure you're managing your portfolio of ASICs appropriately. And that's what really gives miners the advantage long term. The miners that can do that and manage that effectively, buy ASICs at a good price, deploy them ahead of time, they're the ones that are going to win this market. So I think miners are getting more sophisticated with that, but we'll probably see some type of shakeout within the next cycle here too of the miners that maybe bought it at a bad time. But overall, it's a tough market and miners are adapting.
Ethan,
I have to comment, if you guys allow me, please. Quick thing. Well, look, let's be very, very honest about it. The people who right now, people who get cryptocurrency mining equipment are those people who have a bigger wallet. And yes, you're saying that those people, that this market will not change, but I started my business of selling GPUs during 2017. When we dealt with NVIDIA and AMD, NVIDIA and AMD was allocating GPUs to each customer based on their customer profile. They were not giving GPUs in one hands to the person who has the biggest wallet because they knew they have more customers and more market participants. This is not happening in ASIC mining space. So imagine, like right now, there are large, those pseudo public companies that are trying to prove that they are making a lot of money, having a couple megawatts running. And these companies are raising debt and trying to buy a lot of equipment. What happens to newer guys, to smaller guys? And luckily enough, we are not that guy anymore. But there are other people who would like to participate in this space. Thanks God there is a space like a Compass that allows those guys to participate. But before, Compass has been created a few months ago. Before, it was just a disaster. No one could participate in the industry. So I'm comparing Bitmain and other guys, and I can name the names, right now with AMD and NVIDIA, the real chip makers, the real companies who are selling chips, selling GPUs more than Bitmain ever hoped they would. But they are still having that connection with a customer. If you bring them the biggest check and put it on the table, they will not really work with you. They would want to work with you only if they have the much more bigger picture. They would work with you if you're a growing customer or a smaller customer, a bigger customer. The approach is different. So that's what I'm more advocating for. I would like the approach to be more versatile, not just in one direction.
Yeah, it's industry sustainability. I think that's what's missing as a industry standard. It's the sustainability and the view of what's going to happen in 3 years. I think right now the manufacturers only see like in the next 6 months or so how they're going to make money until we get this until the end of the bull run. Which we all wish it's not going to end, right? Like it's great right now, it's fantastic, but there is going to be a point where there's not going to be enough, chips. There's going to way too much demand right now. All the manufacturers are taking in way too much orders. I do not know how they're going to be able to fulfill. So that's going to be something that we can reconnect on in a few months and see what the situation is going to be.
I'm just going to add one thing, Ethan. What you said, I think, is the term discipline. Like having that true fiscal discipline of when do you pull the trigger and when don't you, I just see being so essential. And the ones that I've seen have really done well, and Sergey, to your credit, are the ones that are contrarians. Like like when things look really dark, there are ones that have acquired, have built upon things and continue to scale and grow. And to the whole ASIC issue, the one solution to high commodity prices is high commodity prices. I mean, eventually over time, this will solve. The issue is it's at a much more macro scale than simply Bitcoin mining. It is literally at the fab level at a worldwide basis. Wall Street Journal had just a great article about this, of kind of the bits and pieces that need to happen in order for this to move and some of the timeframes. And we're talking up to a decade for a full solution to really solve the chip issue. So I don't think this is going away anytime soon, but I do think you gotta be really smart about when you buy, because your point, the profitability certainly matters big time.
Yeah, I'll add to that.
Go ahead, Kareem.
Sorry. I'll add to that. I don't really see how mining chip manufacturers can afford to plan ahead 3 years in an industry where volatility can shake out miners in a week. It's like, yeah, NVIDIA, AMD, they operate in much lower volatility industries than Bitcoin mining. And yeah, currently, you know, whoever has the biggest check is actually the most profitable customer, because you don't know anything about their operations over the long run.
One thing I want to say to Sergey's point about AMD and NVIDIA reaching out to the customers, we're seeing that Bitmain and WhatsMiner are trying to do this now, right? Bitmain is making their VIP programs a bit more accessible. And some may argue that point, but they've dropped their minimum orders for these kinds of things from, you know, 1,000 a month to 300 a month, which is a step in the right direction. But I think that they are now seeing the value of going direct and giving more people access. But it's, you know, it's eating an elephant one bite at a time, right? It's hard for them to go all at once and go right direct to consumer, but I think that they're trying to move in that direction. And, you know, like you had mentioned with Compass, that's why we started, right? We started because I couldn't get access to ASICs when I wanted to just buy one and host it. So we had to find a way to buy in bigger batches so that I could get access to the one that I wanted to host at a good facility. And, you know, I think it's going to start moving more in that direction.
But I think even if we, from our experience, if you look back like 2, 3, 4 years, you know, you could see it's already a big evolution, because previously, maybe like 3 years ago, you will not be able to place any allocation, you know, because it was a closed market. You know, it's a few guys, you know, who are closer to manufacturers who are getting a priority. Now, I mean, manufacturers, even though we have a limited number of them, you know, still, you know, in terms of, I would consider it's a oligopoly, you know, but at least internally, they have their own sort of strategy defined. They're trying to expand in different geographical segments, sort of to have more sort of client diversification. Obviously, they are looking, priority for them is still the guys with the deep pockets, because this is a sort of a credit profile. But at the same time, you know, I mean, from let's say the top players, I mean, they are sort of looking out with more diversified sort of client portfolio formation. So, which is yeah, it's a big transformation. Okay, are you happy to move to another topic? Because I think we just this is very exciting. I think we could leave it and expand on that. This is brings us to because we already had a few questions already here as well relating to the energy source. You know, I think for us, the second topic we wanted to cover, and also as part of the initiative of sort of the mining committee here, it's environmental. So ESG basically angle is sort of clearly sort of becoming more, since we have an institutional sort of and more sort of focus, let's say more integration on traditional markets. This is where it's actually the Bitcoin sector now is actually coming head to head with sort of traditional sectors and ESG requirements, because everywhere you look now, I mean, it is there. And I think it is getting sort of adopted and will be adopted here eventually. At least on developed markets, I see this is a clear indication that any big investors, they are looking for allocation, and in their checklist, they do have this item that should be ticked. So on the environmental side, I mean, I think the recent developments we had in China, which is brought a lot of discussion across the Twitter space in terms of concentration in one space and energy source used there. And I'm sure it will develop further discussions. But let's say we're not here to argue, you know, what part of is renewable, not renewable. We clearly see there is a more, let's say, what we want to identify that it's important, first of all, like in normal sectors you have, it's how miner themselves are sort of committed to be a responsible miner, because at the end of the day, it's comes from actual the operator, because like you have in traditional commodities mining space, you can operate in various regions, but it's all comes down to the corporate and their internal policy and approach. So I think this is where we want to sort of touch on that. Also, maybe to elaborate on what initiatives could be taken, because I know some guys, already sort of pivoting into sort of planting trees, others sort of looking on the carbon offsets, and I think this is where it goes. I think Sergey is actively sort of working with oil and gas, to help them on solutions. So I think this is where we want to sort of comment. I mean, I'm sure you all have your own sort of focus and experience, and we'll be glad to hear that. We can start. I mean, the same way. I mean, if you want to start and.
Yeah, I think the key here is corporate governance to see where you want to go, what regions are interesting for your team. I think at Hive we've been very adamant in choosing countries where energy is already green. Iceland, Sweden, Canada. It's basically cheap energy, but it's already renewable, so it's like a win-win situation.
Yeah, I mean, for us, as I mentioned earlier, we're always looking to work with facilities that are 100% renewable or moving towards that. One of our biggest partner facilities is Bit River in Russia. They're 100% hydropowered. We also have great renewable powered facilities in Canada and in the US. And all of the grid powered facilities, which are generally a mix of fossil fuels and renewables, all of those grid powered facilities in the US, they have a strategy, or the power provider that they're working with has a strategy of moving towards carbon neutrality by 2050. Some cases it's more aggressive, but we're seeing that industry-wide, everyone is desirous of moving towards more renewables. Because I mean, look, Bitcoin miners are always seeking the cheapest source of power, and generally that is what's produced in abundance, and that tends to be renewables more than anything else.
Yeah, to add to that, ESG is becoming a big deal. I think it's important as an industry that we control the narrative, because there's certainly going to be a big push on the use, the consumption. You hear compared to countries and all these kind of things. And I think what's promising is there's a huge push going on right now in the United States about green energy and the push to renewables, particularly around wind and solar. Hydro is obviously fantastic, but it's not applicable in all areas. And so some of these new technologies are also going to be more distributed. And I think then the mining also needs to be more distributed along with it. And to the grid point, it's also more intermittent. I mean, the issue with wind and solar is that sometimes it's working, sometimes it's not, which is very different from base load, coal, nuclear, et cetera. And so the ability to curtail, the ability to be flexible, the ability to, be much more, a more grid stabilizer versus a parasitic load is going to be absolutely essential to the ESG story and to the whole idea around Bitcoin being a good citizen. So, we've been on the forefront of this for some time. I would say that, customer demands are still, economics are very important because the downside protection is being low cost. But the second piece of that is also how do we do it in a very smart, environmentally friendly way? And there's a lot of different shades of green, and I think that's evolving. Carbon offset credits. There's RECs that you can buy, which are unique, and then there's running literally behind the meter on a fully renewable plant. So we're seeing all types of different strategies, and I think it's going to continue to evolve. The good news is people are thinking about it.
And if you allow,
yeah, Luxor. Sorry, Sergey, go for it.
No, you go ahead. I'm going to be long, so.
Yeah, so Luxor shares the same view as these two gentlemen here. We think that pushing towards renewable or net carbon initiatives is good for the overall ecosystem. It's good for the narrative of Bitcoin and mainstream adoption. We also think that capitalism will play here. Investors will vote with their dollars, and you'll start to see more investment dollars flowing into companies that are pursuing ESG strategy. So that will naturally occur through the market. It's clear that investors care about it. And then a second point, I think, on Dave's comment on carbon offsets, this is a really important piece because there are a lot of mining companies out there that are using natural gas right now, and they need to find strategies to move to a more green future. And it's not enough for us to just kind of exclude them from the conversation. We should be aiming to bring everyone in and everyone working on it together. And so carbon offsets, I think, are important. They just need to be thought of carefully. Ideally, those carbon offsets are used for net new development, greenfield projects that otherwise wouldn't have been built without the carbon offset. Maybe geographic matching or time matching to make sure that it's lined up with the mining facility. And so those are some really important things at play here. And then kind of relating to the overall theme of like reporting standards, I think this is really important for miners to start to disclose. Obviously things like their energy mix, but drilling into what that energy mix entails, if it's natural gas or if it's stranded gas, that sort of thing. And then also some of this information on carbon offsets. Overall, that's going to make investors' jobs a lot easier to look at these companies and be like, okay, they check these boxes, or no, we still want them to improve on X and Y, and we can help them work towards that. But those types of reporting standards at the ESG level are going to be incredibly important for the new wave of institutional capital coming into the space.
Ethan, I could not agree more. I will share a fun fact here. The total available renewable energy could power the entire Bitcoin network 55 times, about 55 times in a year. So there is a lot of power to be used. I think global DCA could provide a good platform, could be a good hub to develop these standards related to environment and sustainable energy and how we can best protect our environment. I think that we can be a good forum for that topic.
If you allow, let me collaborate a little bit on natural gas and wasted energy. So Renata is right. There is so much renewable energy out there, but this renewable energy is being built in most cases not for crypto miners. This renewable energy is built to power houses, to power the homes, businesses. So the moment we're going to be on renewables, we're going to be bad anyway. They will say, the news will say, oh, these guys are now using our renewables. We do not want them on your renewables. What I'm trying to do with our business is help utilize Bitcoin side effect, which is using a lot of power, and utilize that as a solution for other problem, which is flare gas, wasted gas. There is enough natural gas in Permian Basin and Bakken region, which are two biggest areas of oil drilling in the United States, to power the whole Bitcoin network. So that gas is wasted. It's not doing anything. It's being burned. So if miners were not so afraid to work on the off-grid sources, we would already have taken care of that problem a long time. We started doing this 2.5 years ago. It was very tough. First, we tried to explain to our partners and clients who were hosting clients that they really didn't want to be on off-grid energy, especially on flare gas, because they heard stories that this is not a good thing. It's intermittent, the downtimes, etc. And this is true, but there are the ways to mitigate that. So I believe that cryptocurrency miners have to use mining as a tool more and more for some other solutions. That's the way to go, because whatever we do, if Bitcoin price is going to go up, there are going to be a lot of jealous people who will find the way to finger point on us and say that we are bad guys, because in their mind, we're making a lot of money on a daily basis, and we are not investing anything. It's a thin money out of thin air. So we have to focus more on off-grid. And I just want to touch base. There's a great question in here in the Q&A section. And there's I think Alma is asking a question about, can cryptocurrency mining help the renewables and solar and wind, etc. And I think cryptocurrency mining can be used as a great tool to pay back the solar panels much quicker than any other connection to the grid. Because if we utilize crypto mining and we pair that with solar power plant, we install it and we take this power fully for cryptocurrency mining and buy extra power from the grid during the night, then that solar power plant will pay back in 3.5 years. These are real numbers, not 25. So that can incentivize the use of renewables. And again, look, it's a tool. So it's not a pure making money machine. Here, the Bitcoin mining is, again, a solution to something else. So look, we have a couple of solutions already. One, it's balancing the load. Second, it's a wasted energy, flared gas. Third, optimizing the build out of renewables. We're supposed to be receiving government grants to do this. But unfortunately, the message is wrong there. So we need to talk more and more about what we are doing and why we're doing it in the right way. Hydropower plants are not built on very big scale. There are not that many of them, and I do not think they're going to be more to build. But solar and wind are all around. This is the future, so we need to focus on this a few aspects.
I think Sergey is very vocal. It's great. I think, but everybody needs to be vocal in this industry. I think that's the main problem. Like the mainstream media is more vocal than we are. They have better access. They have a bigger number of followers. They can say one thing, and that's going to destroy our work of like months of building our reputation. So. I think the global DCA is going to be something that's great for to inform the mainstream media of what is actually happening here, what we're actually doing. Because you can have like one bad article about NFTs using way too much energy, and then it's going to kill our work. So. I think that's going to be something we have to work on, being louder than the mainstream media.
Yep, that's exactly the purpose. One of the things we want to consolidate here as a platform, because there is a lot of feedback we have globally, because there's a lot of players, there is a lot of insights from the actual market. Because at the moment, what we do see, especially with price going up, as someone said, there's a lot of jealousy. People saying, "Oh, look at this! These guys are making so much money." And it's true. I mean, some obviously don't think about this sort of the sustainability of this business, and committed to ESG angle, and all this. But I think it will be changing, because I think there should be an interconnect, because some miners, they generally don't know even where to go and with whom to speak, because there's for example, I come from a sort of IFI background, so I know there is multiple consultancy services which basically grants exist, which usually support the corporate sector in terms of the energy efficiency various initiatives. And I think this is where we'll probably try to connect. And in terms of voicing this, we clearly want to communicate to the market on some initiatives of coordination among miners. Is clearly the purpose here as well. So shall we move? There is interesting questions here as well in the Q&A box about. I think Neil is asking about the OFAC sanction and how we can track the hash rate coming from sanctioned regions. So this brings us to the topic we had on another item on agenda is operational and financial sort of standards, and reporting. I probably will want to start, let's say, with operational parameters. I think Ethan captured on that before, because and I think probably Karim, with his clearly background, can give a lot of insights, because the operational matrix, I mean, at the moment, we don't have sort of a clearly defined parameters in the industry. Some people reporting all, information in, let's say, in some misleading sort of way sometimes to the market. So we clearly need some sort of benchmarking there. And then we can move to the financial. I think probably Renata and we have Gabi here, who with vast of background could also comment, because there is a clearly a big challenge, especially for the miners who are already sort of started interacting with the big auditing firms, to see how to bring the reality of mining space into the standards which were created for traditional industry and not yet adapted here. So let's start. I don't know. We can start the same way. Basically, if you have to add on any of these points.
Yeah, I agree with you, Dennis. Though there needs to be some reporting standards in the industry, because anybody who invests in Bitcoin and in mining stocks have no real parameters to look for. All they're looking at is Bitcoin price, Ethereum price, and then they're going to go to YouTube and they're going to listen to some of these people talk about how great these stocks are performing. But if you look at the real numbers and you study these companies, exactly how they're reporting their profits and losses, it's all over the place. All the regulators, all the auditors really don't know what to do yet, because we're the ones actually educating the auditors on how to do this. So yeah, having something that would, like, levels of standards here is gonna help greatly. The common investor, I guess, or somebody that wants to get into the space.
Agree 100% with everything Iggy's saying. Our customers, as they're coming in, that's the first thing that they're questioning is, how do I report this? Is this income? Is this capital gains? How do I make sure that I am doing what's right? Because I think that, the growing consideration is you want to do good by supporting Bitcoin's network, right? You want to add to the network security, especially if you're a small retail miner, but you also want to do right by your government and make sure that you're paying your taxes and making sure that the Bitcoin that you're mining is yours to keep, and you're not going to have to worry about breaking some obscure law or missing something, because most accountants and tax professionals are still getting up to speed with this whole new emerging asset class.
Yeah, I think I'll add to that like a lot of the issues that miners face in like accounting, et cetera, they're not unique to mining. It's actually stuff that impacts like everybody in the industry roughly. Currently, it's very hard to get audits, and it's very hard to get like even to work with banks for a lot of companies in the space. The good news is cryptocurrency is actually natively auditable because of the cryptographic nature of the underlying assets. So you can do some really cool stuff like proof of reserves for exchanges, where you can actually show that you have reserves that meet each individual client's liabilities. And then for miners, there's still a lot of room to kind of experiment and I think like explore ways to actually back this in math and not just meet but surpass the expectations of the traditional financial ecosystem.
Yeah, and focusing on Iggy's point there on investment into the space, I think the reason these operating metrics are important is because they mean very different things. For example, 1 petahash of self-mining has a very different margin profile than 1 petahash of hosting, 1 petahash of revenue split, 1 petahash of management at the pool level. And so if you're kind of reporting kind of this very high level stat of hash rate, it's very confusing for investors, and it's hard for them to pinpoint, okay, what does that actually mean from a financial perspective? And so kind of breaking out those segments and making sure that you're drilling into that as a miner and reporting that well, I think is important, and setting standards around that is definitely important. And then there's some other things too that the miners can really touch on. I find it hilarious that most of the public miners run on different depreciation schedules. Like, why does one miner have 3 years when another has 5? And so having standards around those types of things will help investors and a lot of this like new capital come into the space, both from the public market perspective, but also the private, really jump into these things. And then, on the kind of topic of like announcements, you're seeing a lot of the public mining companies just announcing, I'm going to have 10 exahash by next year. And that's like their sole announcement. As an investor, you need more information than that to really drill into if that is a good purchase or not. You need to know the purchase price. You need to know the efficiency of the hardware. You need to know the exact schedule of when those machines are arriving. You need to know if the miner can actually plug those machines in or not, because we're seeing now some of the public miners just can't even plug their machines in. Expected delays and all of these types of things are really important. So the more kind of disclosure, the better for these public miners. And I hope that this will happen a bit naturally because more investors are looking at the space. There's more sell-side research analysts covering these stocks, but it's really important for miners to adapt both in public and private markets around this.
Ethan, I am very glad to hear that all of you are advocating for more transparency and more standards around the accounting standards really for mining. I will share this with you. Global DCA is currently working with the European Financial Reporting Advisory Group to put together standards for miners, which don't exist. The accounting profession right now is trying to determine whether they can use the existing standards for mining purposes. And their best comparison is mining of gold, and it just does not compare. It just doesn't compare. Defining of what costs should be included in the cost of mining a Bitcoin. What does it mean when, how does these assets, how should they go onto your balance sheet, at what values? Should they be at fair value? Should they be at cost? What is the accounting treatment of these assets? And to start with, at what point do these assets exist? Just like you're saying, standardizing, what does it mean, a hash rate? There are so many different components that go into it that needs this standardization. So then when one miner reports, it is consistent with another mining entity and reporting on the balance sheet and income statement. In addition, recognizing revenue. At what point can we recognize that this asset exists and therefore we can record revenue, income on your income statements? That those disclosures and accounting standards are going to be very important to really legitimize the industry, to make sure that the financial statements, when they're presented, they're consistent, they're transparent, and they are meaningful for investors, lenders, bankers, that you will start dealing with these institutions day in and day out. So I couldn't agree more.
Dave, do you want to add something, or Sergey?
Yeah, I can jump in. So I think I agree with a lot of the components. Sunlight's always the best disinfectant. Transparency is good. I do think that research analysts, to Ethan's point, is getting research coverage of the sector is going to open up a lot of things that's necessary, just because there's euphoria. It's like the .com. It's like 99 when people were valued on the number of clicks or the number of users or visitors or things that frankly had no real relation to the actual underlying business. The reason I hesitate is sometimes you got to be careful what you wish for. One thing I do appreciate what the U.S. government, I think, is taking a relatively light approach to date on a regulatory and standpoint to let some of this work itself out and get some best practices. I always worry that even the best intentions, when it gets to the regulators, end up becoming too problematic when they get implemented and get put in place because of things that weren't well thought through. And I think we stand the risk of that if there's an overarching regulation that causes significant challenges or significant reporting, and frankly puts us at a position where we're not competitive at a worldwide basis. Because this is it's a global business, it's a global market, it's competitively on a worldwide scale, and you got to be able to compete that way. So those are my hesitations and my worries. So I'm hopeful there's somewhat of a middle ground, as I think this still evolves.
Absolutely. I think, to the extent that better disclosure can help the mining community obtain better credit and, be beneficial to the investor, for example, I think that is definitely something that can benefit the industry as a whole.
Yep. If anyone else has anything to add, or we can go through some of the questions we have. I think we had a question here in terms of how, Dita, how can the countries attract more mining companies and make things attractive for the mining industry? Anyone wants to make a comment on that specific? I can make a reference, obviously, to the global DCA. Clearly they can reach out and discuss possibilities. This clearly should be a more systematic approach to that, depending on regulation of the local in the country, basically, and also, I guess, for the miners, it's clearly a certain set of requirements that should be done. But anyone want to add something here specifically? No.
Dennis, this was for a country level.
Just on the country level, on the generic, it's the country level, yeah.
Yeah, I'll just put my 2 cents. I don't think it's that much different than any other economic development. The key components that miners are looking for is economic incentives, obviously cost of energy, sources of energy, and then I would just add to one of the challenges we see in some of the global scale. I'm sure Whit can comment on this. Is just geopolitical risk, right? There is concern if there's not strong rule of law that regulatory frameworks can change very quickly or very rapidly that could put these types of assets either at risk or change the underlying I guess ownership, et cetera, or suddenly they become legal. Like those are the kind of concerns that we hear time and time again, which is why we focused on North America today. But I think there's other jurisdictions that are going to be really interesting to see how that plays out.
Yeah, to Dave's point, it's geopolitical risk is certainly the biggest factor when it comes to where people are going to locate their facilities. There is cheap, abundant power in many places. When you look at, Venezuela is I think the low-hanging fruit in this kind of conversation. They come to mind as the prime example. There is abundant, cheap power, and by cheap I mean free for most people that are mining there. But you have the massive geopolitical risk of your operation being seized within 24 hours and with really no notice to you. So it's very hard to justify the allocation of millions and millions of dollars worth of hardware to a place where that could happen. So I think that the biggest factor is governmental stability when you're looking at how to attract miners to your region. Once that box is checked, assuming that the geopolitical risk is minimal. Incentives, right? The same as with any other business. How do you incentivize any business to move? It's through tax breaks. It's through giving them preferential treatment in one way or another when it comes to having the business relocate there or locate there initially. And a great example of this is Mayor Suarez in Miami, right? The example that he's setting on a city level to attract big tech talent, and even going so far as right now reaching out to Florida Power and Light and the Turkey Point nuclear plant, which is just south of Miami, and pushing for them to provide 1 cent power to allow for Bitcoin miners to come here is something that can be done. Those kinds of governmental pressure on power providers with tax incentives that will attract businesses. It will. If you are able to provide a fertile environment for a company to grow, then companies will plant there.
Yeah, Whit highlights a really important part there where it's not just the government level. This is like state level and municipal level. There's certain states, even in the US, that have been very unfriendly towards miners in the past. I don't think miners will easily forget what Washington State did to a lot of mining farms there versus somebody like Suarez or somebody like the governor of Texas that's actively tweeting about Bitcoin mining. That's much more encouraging for people to set up long-term operations here because they know they have the local jurisdictions in their corner and their support. And so I think if jurisdictions do want to support Bitcoin mining and they want that economic activity, they need to voice support for it and make sure that miners don't feel like, what happened in Washington State or similar in Canada, in British Columbia or Quebec at some points, like that happens to miners.
Yeah, it's not just to voice support, it's also to educate themselves on what crypto is. I think the governments have a feeling of what it is, but they don't have they don't go deep into what it needs to really develop this industry. That's what happened in Quebec. Like I live in Quebec. The government thought that they knew what they were doing, and they kind of killed the industry here in Quebec by doing what they did. So we don't want things to repeat like that in other promising jurisdictions.
So basically, for anyone have a specific questions on developments in their specific country, I mean, they can reach out to Global DCA because there is a much wider sort of coverage in terms of digital asset space and regulation besides the mining. So I guess this is all interlinks because, I mean, clearly we have some interesting regions, we have an interesting sort of resource base, maybe interesting climate. for investment, but at the same time, the regulatory sort of environment needs to be fine-tuned to be able to work with this sector as well. So I think we covered the main topics here. You know what we had. We obviously have a much wider scope of items we can go through, and going forward, we clearly will be sort of adding more topics and discussions. I mean, from the mining committee part and the initiatives, we will be communicating sort of in terms of the next step and the plans, because we're going to have some working groups set up on some of the sort of developments. We have, let's say, much wider sort of options for anyone interested to join. And it's not only from, as I said, from a mining space, because we started interactions on various sort of other players who, for example, on the environmental side, on the standardization side, you know, on the reporting, because it's clearly it's something that should be done and achieved jointly, not just from a sector players, but from a wider engagement. So we're quite open for any interactions, sort of interconnections here. Any sort of just want to check any sort of other sort of specifics questions we want to raise.
Denis, there is a good question on Africa, if you allow me to answer that.
Yeah, sure, yeah.
Yeah, so so there is a question, if there is a vision to see Africa participate in the mining industry, what are your opinions on Africa currently participating in the BTC mining space? So I'm not an expert on the whole Africa, because it's the second largest continent, but I can talk about Nigeria. So Nigeria is the largest gas flaring country in the world, and it's one of the largest producers of natural gas in the world. And yet at the same time, there are only 60% of Nigerians who have access to power, to electricity, meaning they cannot turn on lights when they need it. There was a cat. And in rural areas, it's even less. It's around 30 to 40%. So that being said, utilizing cryptocurrency mining, we can capture that gas and build microgrids in rural areas of Nigeria. And with the help of those microgrids, we can give or sell at a low cost offset power to Nigerian communities in the area. For that, we would need the government support. And I would like to emphasize that Easy Blockchain has been on that path for the last 1.5 years to be participating in Nigerian cryptocurrency markets, mining markets specifically. The amount of gas being flared there is probably, don't quote me on that, but a few times more than in the United States. And if you remember, in the United States, we have enough gas in Permian Basin to power the whole Bitcoin network. So not only we could build mining facilities there, but by doing that, we could provide power and build power distribution systems for the whole communities in there. And I believe there are other countries in Africa who have the electricity problems, and they have a lot of resources that are not properly used.
Yeah, I think from a geographical sort of diversification, we clearly will see a more regions joining, I guess, the mining space. I mean, clearly Africa was not was not playing an active part in the last few sort of years, but I'm sure it's something we will see coming forward, as well as Latin America, which is, I guess, it's also picking up. And any other specific questions or comments?
I see the top question here is related to OFAC sanctions, specifically around hash rate from sourced sanctioned countries, which I think is a very nuanced topic and probably deserves a wider discussion on this. Probably something we can't cover in 8 minutes, but just from a high level standpoint, I think if you are a North American based entity, you need to be doing the proper checks to make sure your counterparty is compliant. And so whether you're running, a co-location and you're hosting miners, or whether you're financing ASICs, or helping miners find co-location space like Compass, or a pool like ours. Like, you need to make sure that you're doing a certain level of diligence checks to make sure that you're working with counterparties that you legally can under the laws of your jurisdiction. I would say that the idea of pooled hash rate to sanctioned countries has gone a little bit overblown. In a full paper share method, which the majority of mining pools operate on today, your counterparty is really the mining pool. And so you need to make sure that you're dealing with a proper counterparty and you've assessed those risks. Maybe they are interacting with other players themselves, but at the end of the day, you should really be kind of assessing them as your counterparty. That's a hard task. It's a lot easier said than done, because a lot of these global mining pools, for example, they're not reporting data. They don't show exactly who they're working with in their business end. They're probably working with people from all over the world. So that's a hard task, but one that as an American or Canadian entity, you need to try and focus on.
I think we definitely should have a separate session on the mining pools, because I mean the North American market was quite active on that front, with the new initiatives, and we clearly see, especially with last week, let's say a change. What happened in China, clearly it did some transformation and gave some initial sort of a push for developments, which is great. Anyone wants to anything else here?
There's a question about secondary mining markets, secondhand, I guess. So the question is, how do you anticipate the repair industry and secondary markets will develop as institutional investment in mining grows? That's something that we've experienced quite a bit. A lot of the older gear is going towards countries where power is very cheap. And when you say power very cheap, meaning, like Whit said, free. So it's a dividing thing, right? We as institutional miners, we want to be able to resell our older hardware that are either working or half working. We want to sell it to parties who are open to buy it, but then if you sell to those guys, is there any issues that on where they're going to be running, which country they're going to be running? It's great for the whole network. It kind of stabilizes the network, because a lot of the older hardware are still running, which is fantastic. But there's a debate there whether we should continue doing so or just stop doing it.
I guess the discussion on the secondary market, I think it's also deserves a separate topic, because
yes,
for everyone. But it's clearly it's another example of what we covered before. I mean, in terms of the overall supply to the market. I mean, if you roll back again, like 4 or 5 months, I mean, people felt like all these S9s and some of the models I even didn't hear about before. They're back online. This is an example. So that's how the market basically can transform, pretty quickly. So I think we have a few minutes left, and I think shall we have a closing on that, unless there's anything else that someone want to raise?
What's the next big thing?
Sorry, Tony, I did not. It was very quiet.
I said, what is the next big thing in mining?
Off-grid mining, Tony. Everything gonna go off-grid.
Hash rate derivatives and hash rate based products.
Agreed.
Yeah.
Well, let me spend a little bit of time before we close the call, which, you know, we were so happy to have you all here on the call. And, you know, I think we touched on many very interesting topics. You know, Global DCA is an organization that is looking to really continue this relationship, this special relationship with the mining community. We are definitely looking to put forward standards related to mining and the industry as a whole, but have a special place for the mining group within those standards as it relates to standards that are internal, you know, operational standards. For example, the ICO standards that we're putting forward. You touched on some what we call KYC AML standards for understanding who you're dealing with. As well as some accounting and tax related standards and disclosures, reporting disclosures to help the mining community better be considered as a legitimate entity that can be invested in, that can obtain a loan easily, that can utilize the equipment as collateral for loans, you know. All these things we're looking to work on them. And so to the extent that you are interested in participating within the organization, we would welcome you as members in the organization. And I'm not only, you know, speaking here to the panel, you know, who are, you know, this was great to have this discussion with you. You have so much expertise in this field, as well as to all participants that are on the call here. We're very much looking forward to utilize all of your knowledge, because this knowledge is not well understood by accountants, by regulators, and anyone that is reviewing, you know, by bankers, anyone that is reviewing the activity. And so we're looking to make that more transparent and to help the industry really advance in today's environment. I welcome you as members, and to the extent that you'd like to get more information, find out more information about the Global DCA, please contact us. You can always contact us through LinkedIn. It's very easy to do, or you can email us at membership@globaldca.org. At any point, you can contact any of us here, whether Tony, Gabby, Anna, or myself, or Denis, and get a response. Thank you so much.
And with that, I'll go ahead and close our event. It's been a great and distinct pleasure to welcome you all here today. As mentioned by Renata, we would be very pleased to welcome you as part of the broader membership of the Global Digital Asset and Cryptocurrency Association. I will also just take a moment to advertise and promote our upcoming event, the Crypto Connection Conference, which is co-sponsored and co-hosted by Tab Forum, featuring a number of different industry leaders, as well as keynote speaker Mark Cuban, owner of the Dallas Mavericks. We expect to have a very exciting, interactive, and multidisciplinary conversation about how it is that institutions can lead in the digital era. Again, this now concludes our session. We look forward to welcoming you to further events. And if there are any questions or issues that are outstanding, please feel free to contact us directly. Thank you very much, and have a great rest of your day. Happy Earth Day.
Thank you.
Thank you. Thank you. Thank you very much.